So let's start off now. Okay, so like I said, our tagline is to creating wealth the right way, and our vision statement is to fully equip you to create kingdom wealth. And so welcome to today's Zoom session, the first one for the day. All right. So it's going to be a 30-minute video. I just want you guys to understand this, that even though this is recorded, not everything that is shown or done here in this live session will be uploaded. So it's okay watching the video when it's uploaded later, but it might not have everything that we discussed, all the live interactions that I did in terms of trading. There will be some, but it might not have everything. So I would strongly encourage everybody to make sure you log into at least morning session or the evening session. All right. Okay. And of course, Zoom will automatically close up the session after 40 minutes, meaning it's the end of the session. So don't worry when it closes, it just closes. It's okay. Okay. So let's get into today's session. It's going to be interesting. We're going to talk a bit about financial management always. And here's a key word for you. It is what? Greed. Okay. So now you're going to ask me, why are you talking about greed? No, none of us are greedy. Yes, I agree. None of us are greedy, but we could become greedy as we start to invest, because greed is something that is very inherent to the human nature. Okay, so something that we have to be careful about, and something that I want to help you guys with. So here's the thing. Hebrews 13:5 says, keep your lives free from the love of money. Money is good. Money is actually neutral. It is neither evil nor good. But the love of money is pure and simple evil. Okay. And then Luke 12:15 says, watch out, be on your guard against all kinds of greed. So there can be different types of greed. Okay. But one has to do definitely with your money or with your finances. Proverbs 11:28 says, those who trust in their riches will fall. So if we, even though we are very wise in terms of our investments, if our trust is put in our money, one day it's going to be lost. Every day, when Jesus comes, all of this is going to disappear. It doesn't matter. So let's not put our trust in our money, but we learn to invest well. Okay, brilliant. All right. So I want you to know we're not creating kingdom wealth if we're greedy. We're actually creating ill wealth. Okay, ill-gotten wealth. It's coming from our greed, not from our love for God. So you need to be wise in making the best investments. Do not greedily make the best looking investment. Okay, so we have to be wise in making the best investments. Brilliant. Okay, so how do we fight greed? Now that's a pop quiz for you guys. So if anyone wants to answer that question, please go ahead. It's pop quiz time. Anyone? How do we fight greed? Give me your thoughts. Give me your thoughts. So how do you fight greed? Okay, we have questions. Oh, brilliant. So Johnny, that is a brilliant answer. You fight greed by giving. Okay, you fight greed by giving. That's a beautiful answer. And that is the right answer, by giving. Okay, we can fight greed by giving. Now, how do we do it? Let's look at this. First Timothy says, do good, be rich in good deeds, and be generous and willing to share. Okay, each of you should give what you have, decided in your heart, not reluctantly, not under compulsion, for God loves a cheerful giver. We often hear this a lot in church. God loves a cheerful giver. And so one of the best ways to defeat or fight greed is to fight it by giving. Okay. Now, anyone knows pop quiz number 2? Do you know who this fellow is? This gentleman on this picture. He looks quite old, which gives you a clue. He's a man of the previous century, or the century before that even. Anyone has a clue who this is? I think I got everybody stumped there. Yeah. Okay. I think we have an answer. Someone's posted something. Let's see what does that say. Father of finance? No. I'll give you a clue. It has something to do with toothpaste. Well, not just toothpaste now. You have a lot of, you know, anything from mouthwash to very famous. Starts with the C. Colgate. There you go. Yes, Mr. Tom Ungle has given us the right answer. This is William Colgate. Okay, his name is William Colgate, and he is the founder. His company eventually became Colgate, and his giving, as he grew richer, he decided that he would increase his giving, and the best way he fought greed was to increase his giving. It went from 10% all the way to 50%. kept giving more and more, and God kept blessing him. So one of the best ways to fight your greed is to give. All right. Now, when it comes to investments, how do we fight greed? Okay. Now, that's not pop quiz. I'm going to answer that myself, especially because today we have this highly volatile market. You might have noticed that the market goes up and down, up and down. It's always up and down. Today, the market is opening at about 5% up, but that's because everything in the global market is up. But you never know. It's very volatile nowadays. It's trying to find its mean. It's trying to come back up. But this is very important in a volatile market. How do you do that? First part, do your research. Okay, you got to study the market and pick up a few stocks to research well, and you find out what are the levels of resistance and support for that stock. You look for a trend, a market trend in that stock to materialize, and then you wait for it. Okay, when you see the market trend, when you see it's going past its resistance or it's coming up from its support, it's a good time to invest into that stock. So do your research. I will, in the next few sessions, we will be talking about how we do this exactly. But first part, do your research. Okay. Now I'll give you a real example. On the 3rd of April, I decided I was researching all the oil stocks. I realized that because there is a possibility that Russia and Saudi Arabia would come to an agreement, that the shares of the oil companies might rise up. So I kept a track of BPCL, which is Bharat Petroleum. And I realized that I looked for its levels of resistance and support, and then I kept it on my tab. I was waiting for a trend to materialize. And then what happened? So that was, let's keep it there. Now, the second point, how do we fight greed, is we have to have a clear entry and exit strategy. So you need to know when to enter and when to exit. And then you have to stick to it. So if I say, hey, I want to enter at 307, well, I'm going to enter at 307 if the trend is right. I won't wait till it's 310 if the trend is right. Okay. And if I say I'm going to exit at 315, I'm planning to exit at 315. Not when I get 315, let me wait for 316. No, 317. Chances are sometimes it will hit 315 and go back. Why would I say 315? Because I've learned what is the resistance. Sometimes the resistance is 315. It could go back. Okay. So you got to stick to your predetermined values. Don't be greedy with your levels. So what did I do? I decided to enter if it cut 307, which it did, and exit at 312. So here's what happened. I bought 100 shares at 1212, 307.25 at 1212. At 12:45, it hit 312. I got out. I didn't care if it went up again. I got out and I made 560 rupees in 30 minutes. Okay. Then I kept watching the share. Okay. It's not that I just let go of the share. So the thing there is, the next point is, don't overexpose your position. Don't buy 1,000 when you can afford only 100. So if I can only afford 100, I'm not going to buy 1,000 shares and keep it hoping it goes up. And if I meet my target, I'm probably not going to trade again. Now, I met my target of 500 rupees in that lot, but I hadn't met my daily target that I was planning for. So I was keeping track of the share, and I realized it's still going up. I look for more support and resistance. And here's what. Once I sold the initial lot, I waited for the next trigger. I saw that if it's going to cross 319, I'll buy. And it crossed 319. I bought 100 shares at 319.65. And then I was planning to sell at 325. It went to 324 something and it started coming back. And I sold it off at 323, which was an automatic stop loss, which I will talk about. That happened. And so I made a profit of 335. This happened within about 10 or 20 minutes. In fact, I will show you the timings later. Okay. So make sure, the next point is, make sure you have a stop loss. So pop quiz time. What is a stop loss? Anyone can answer me as to what a stop loss is? Anyone with an answer to what a stop loss is? Okay, cutting the loss trend. Okay, so if you feel that you're going to lose money on it, it's better to get out. Okay, I'll take that answer. Basically, a stop loss is to minimize your loss. So whenever you buy or sell a stock, you have to make sure you put a stop loss. Here's an example. So a stop loss below a support level. So if, for example, I'm buying a stock, I see the trend is right, I'm buying it. I bought BPCL. Okay, I'm seeing that the trend is right. I buy it at 307. I keep a stop loss at 304 because that is just below the support level. So 304. So I kept my stop loss at 303.75 or something like that. So I keep my stop loss below the support level of 304. If the share for some reason that I didn't know goes below that, it will automatically sell it off, and I would make a loss, but my loss would be just that much. Okay. Now, if I was to sell a share, I'd keep a stop loss to buy back the share above the resistance level. For example, if BPCL again, I felt that I looked at the trend and then showed the market is going down in that share, and say at 350 I sold it, but I see that the resistance level is the resistance level is at 353. So I put a stop loss buy at 354. Okay, now let me show you through my example what happened. So I always create a stop loss. So for example, BPCL had a stop loss of 304, actually 303 something in the first lot, and in the second lot that I bought, I had a stop loss of 316. So I also almost every time have a trailing stop loss when the share starts to move. Okay, and that's why the second time it sold off on my stop loss. I still made a profit, but because I had a trailing stop loss, I keep increasing the levels. So when I buy it at 319 and it goes up to 323, I put it at 321. When it goes up to 325, I put it at 323, like that. So if it falls back for some reason, I still make a profit and I don't lose money. So a trailing stop loss to make sure I retain some of my profit. Okay. Now, how do we fight greed? Again, we have to book profits regularly. So don't be greedy. If your target is 10%, for example, you should partially book some of it at 5% or 7.5%. You can make that decision. But don't wait till I want to sell all of this at 10% gain, and that's it, nothing else. If you wait like that, sometimes you will fail. So as long as you can make a decent profit, sell it off or buy it back, depending on whether you sold or bought in the first place. So make sure you don't get too greedy. Book profits regularly. Lastly, don't get emotionally attached. Okay, this happens to me a lot. Sometimes I get emotionally attached to shares. I was telling someone recently, I bought Federal Bank because that's the bank I've been in connection with for 30 years now, and so there's an emotional attachment to the shares of Federal Bank. So I bought Federal Banks, and it made a loss. Okay, so don't get emotionally attached. Watch the trends and make a trend-based decision. Now, don't try to get the maximum. You will never get the maximum. Make a choice to see, for example, if you think the maximum is 20% that day, you can exit out at 10 and 15%. You don't have to wait till it reaches 20. It might never. And if you make a loss, don't trade that share immediately in an attempt to recoup the loss. The chances are you will only increase that loss. Now, let me give you an example. So what happened? I made 2 profits in BPCL, and I got emotionally attached. So the next time when BPCL went down from 324, it went down to 317, and I felt it would go up again. So I bought 100 shares at 317.25 at 2:05 p.m. 7 minutes later, it hit my stop loss of 314, and I made a loss of 325 on that lot. So where I would have made 800 and 850 plus on two sales or 2 transactions, I made only 500, 560, 570 rupees on 3 transactions because I got emotionally attached. So my suggestion is don't ever get emotionally attached to your stocks. Make a decision based on the trend. Make a decision based on the fundamentals. Make a decision based on good investment advice. Okay. So a recap of how do we fight greed? We fight greed by giving. So I would encourage us to give to people, give to God, give to the church, give to ministries. As you give, your heart would become less and less greedy. You are more willing to share and more willing to give. In a volatile market, these are the things you got to do. Do your research. Have a clear entry and exit strategy. Don't overexpose your position. Make sure you have a stop loss. Book profits regularly, and don't get emotionally attached to that stock. Okay, brilliant. So here's our assignment for today. Okay, how do you create a stop loss? I want you to go research this. If you want to send me the answers back, great. But remember to learn how to create a stop loss. Where would you place the stop loss at? Third question, there is a Nifty in another country. Which country is that? And finally, a bulls and bears question, which is the most famous bull sculpture in the world? All right, so that's our assignment for today. Please do go back and get these answers. Okay, and so I'm going to open the floor for any questions that you might have. You can post it into the chat. I will start taking them up. In the meantime, I'm just going to look at the market as well, and I welcome you guys to join me. All right, hang on. Question time. Okay, anyone with questions? Okay, so we have a question asking about explaining the, why is this? All right, yeah, we have a question asking to explain what is resistance level, what is the trailing stop loss. So I'm going to give you answers to that. Here we go. All right, so a stop loss is basically something that you put to minimize your loss, all right? And so for every share, the shares never go up straight like this, or they don't come straight down like this. If you ever watch trends, and I will show you, for example, let's look at examples, for example. For example. Well, that is really cool, Saj. Uh, let's look at this, okay? Oh, there you go. All right, so you can see, now I'm going to show you something. You can see this. I'm watching a share called Lupin. Okay, I'm watching a share called Lupin, and you can see this share doesn't go, it doesn't go straight up or it doesn't go straight down. It goes like this. Say na 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 na. So it dives up and down. Okay, and so you got to know where the resistance is and where the support is. For example, this is something called a 50-day moving average, and it has crossed that. That means it is a good time to buy that share. In fact, I have just bought that share. And so you have to understand when to buy a share, when to sell a share, things like that. I'm going to buy another share that looks interesting, even though it's just come up resistance. I'm just going to wait for that a little while. Okay. So you got to be sure when to buy and when not to buy. So I keep a track of that. Okay. Does that help? So the trailing resistance and support would be, let me show you another example for it. Okay. Let's take the Nifty. Okay. Now do you see where this keeps going and hitting this line? That is a resistance to the share. When this share crosses above, the line, it becomes a support. So sometimes it'll hit this and go back again. But right now, this share is keeping on coming to the moving average and going back down, and so that is a resistance. It goes up, it hits it, it comes down. When it is a support is where it goes down. A support is where it goes down, it hits the support, and then it goes back up. So resistance is when it goes up, it reaches the resistance barrier, cannot go, it goes back up. And if it crosses the resistance and it goes up, then that resistance becomes the new support. If it's going down and it crosses the support, once it crosses down, the support then becomes the new resistance. Okay. Okay. Next, trailing stop loss. Okay. So for example, if I bought a share at 320, okay, imagine I bought a share at 320 and it's going up, and today it's hit 340. Now I want to make sure that I don't lose all that money. Okay, 340 minus 320 is 20 rupees per share. What if this share goes back down to 310? Instead of making that 20 rupee profit, I would have made a 10 rupee loss. So what I do is I keep increasing my stop loss, my trailing stop loss. So initially when I buy the share at 320, the stop loss would be 315, example. So if I lose money, if the share goes down, I'm going to lose only 5 rupees. Then when this reaches 325, for example, I might put the stop loss at 319. When it reaches 330, I'm going to put it at 325. When it reaches 335, I'm going to put it at 329. When it reaches 340, my stop loss is 335, for example. Now, for some reason, the stock goes back down. For some reason, I would have hit the stop loss, the trailing stop loss, and I would have still made 15 rupees of profit rather than losing all that gain. Okay, so that is why I keep a trailing stop loss. A stop loss is to minimize your loss, but in the time when the profit is up or the share has gone up, I would keep a trailing stop loss to make sure I don't lose out on all the profit. Okay. Now, there's another question. Can we? Oh, what is this support line? Okay, let me share that one. Let me share the screen again. Okay, so a support line is basically where, see, for example, this share has come here and now it's actually going down. Okay, the support line was at 380-ish. So this support line is usually a 50-day average or a 200-day average. So this green line here that you can see on my screen is the 50-day average, and this is the 200-day average of the stock. And so that would show, that would the 50-day or the 200 days usually the support or the resistance level. And this is all done by any of these. This is a free website called Intraday View. It'll show you where the support levels are. I use this a lot to decide when to buy, when not to buy. This is something called MACD, the bottom part, and you can see the blue line has cut the red line, which tells me that this is now in a good position to buy. So I use these things. In fact, I even put stock alerts. So for example, Lupin had a stock alert that it's crossing a point that I wanted to, and so I bought it. Now Indoco is crossing the line, but it's still struggling to cross that 50-point mark. So you can see this. Indoco has come here, it hit the resistance, then back down. It goes back up to resistance, bang down. And so if it crosses, then I know it's a good time to get into that stock. Okay, so it's based on, this is how you decide or not to get into a share. Fundamentals, basically. Okay, does that help? So we have one more question. How do you do intraday? Well, intraday is basically, I would look for certain stocks that are volatile. For example, I have a bunch of shares that I consider volatile shares, and these are volatile shares. I keep track of them, and I would trade in them based on the market trend. So, for example, the Kotak Bank has more volumes on the sell side. I'm going to wait before I do anything there. This is one of my favorite stocks. So there's no clear picture there. You can see 83 here, 84 here. So we're going to wait till it shows a clear trend. And so these are stocks that I normally intraday. It's very early in the morning. I don't intraday early in the morning unless there is a really good buy that's coming in. But mostly I just keep to the stock. Okay. Let me show you some other things. Now Imami, I sold it off at 181. Now it's at 184. That's just the thing. It's okay. I don't have to wait for this 185. I can sell it off, get enough profit, and go look for the next best thing. So yeah. What is the intraday commission? Okay, for Zerodha and most of these trading apps, it's either 20% or 0.01%. Sorry, 20 rupees or 0.01%. So when you intraday on a share that's 600 rupees, you're going to be charged about 7 rupees overall after all the taxes. So a 600 rupees stock, for example, would have 0.01%, 6 rupees. That means 1%. Sorry, 6 rupees plus. Sorry, it's 0.01%, but it's the number of stocks that you involve. So if I buy 100 shares of 600 rupees, that's 60,000 rupees. The commission for the app or the trader is will be 6 rupees plus all the transaction charges and the NSE charges will come to about 7-8 rupees for one transaction. So for example, if I buy 100 shares of something that's 600 rupees and it goes to 640, I have made 4,000 rupees, out of which I will give a commission of 8 rupees and I retain the rest. So that is what an intraday commission would be. How much should be the minimum for intraday trading? Okay, so the next question is, how much should be the minimum for intraday trading? It depends on what you're comfortable with. I would normally keep about 60 to 70% for holding shares, and I would use about 10% is reserve money. I don't touch 10% of my portfolio, and then the rest 20 to 30 to 40% I keep as money for intraday. Now, intraday also has leverage. Okay, so most brokerages will offer you leverage. So if you have, say, 10,000 rupees, you might have a leverage of 40,000 rupees. So you can do a transaction worth 40,000 rupees if you have only 10,000 rupees in your account, because the stock brokerage offers a leverage. So if you have 2 lakhs, you could do 8 lakhs of trading. So that's a good question. Do you short sell? Of course, I do short sell. Uh, I just pointed out that I do a lot of short selling. In fact, whenever I see that the market is looking bad, I would sometimes look for good. See, just like you have support and resistance for a share that's going up, you again have resistance and supports for a share that's going down. And so once you watch the trends, you will realize that it's probably something you need to sell. We can look at something like that. For example, today, I don't see anything happening today because everything looks to be good today. Oh, this is the website I look at, Money Control, to see where each of the markets are doing. So you can see every market, the Nasdaq, the European markets, all the Asian markets are up, and so that tells me, I should be invested today. I should put in money. Yeah. Now this is a share that I have. It's gone up. It's at its max. It won't go anymore today. So I keep holding on to that share. Yeah. All right. Any other questions? If not, we're going to wind up soon. These are just stocks that I keep my eye on. Oh, so this is a stock I wanted to buy, but again, it's at full. It's again already gone up and fully stocked up. So it hits its upper circuit limit, so it can't go up anymore. This is the stock that I hold. I love this stock, All India, and it's quite good. So I keep it. All right, so I think we can close now. Any other questions left? If there are any other questions, we can answer those questions. Others, we should, be done for the day, for this session at least. We do have an exciting evening session as well, but I would definitely entertain more questions. Okay, let me pick up some questions that have come through the chat for a long time now. Okay, one of the questions that has come is, do I invest in only large cap funds? Okay, so large cap funds. Let's see an example of a large cap funds. I've seen close. Okay, so large cap funds. For example, BPCL. Now this, because I've been talking about BPCL a lot. Let's look at BPCL. Now BPCL, for example, is a large stock, large cap fund. Okay, large cap stock, because its market cap is very huge. There is a level at which they become a large fund or a large cap stock. And so you can see here, HPCL, BPCL, HCL Tech, these are all large stocks. And so I wouldn't suggest that you only stick with large caps. Large caps are safer. Some people say large caps are better because they have more cash reserves and all of that. But that's not necessary all the time. You have to decide what to hold on to. You have to decide what to give up on. And so that's a decision you've got to make. Okay. Yeah. Anything else that I can answer for you guys? So now look at this. Okay. Can you see this? Can you see this? What's happening here? I bought Lupin at 681. It's gone up to 684. It's just been a few minutes since I bought it, and I'm already sitting up on 350 rupees of profit. You can see this. All I did was watch the trend, look at the I looked at this. I waited for an alert. It has cut the line. Now the old resistance is the new support. There is buying support there. It's going to maybe bounce around a bit, but I'm going to hold on to the share. I like it. I will probably sell it off when it reaches 685, 690. So you can see now 680 was the resistance, or the old resistance. It became the support. Now you can see it's bouncing off on that. It's bouncing and going back up. So, and again, shares don't immediately. I'll show you this. So shares don't go in a single line. Okay, I don't have an upgrade there, but let's. All right, sorry, 1 minute. Yeah, shares don't go in a single straight line or up and down. It bounces. So this is what Lupin is doing today. See, this hit the support line. The resistance became the support line, and it's been bouncing back and forth along the support line. Eventually, it started going up. All right. So that's it for now. Any more questions, you can send it to me privately if you want to, or over WhatsApp. Once again, thank you guys for listening in. We have 16 people on the chat today. That is wonderful. Let me close with the with what to do. Okay. So once again, just remember to do the assignment, but it's not homework, it is your work. It's for you to get into this habit of doing research. Any further queries, please WhatsApp me. I want you to share as much as possible. Subscribe to our YouTube channel, follow our Facebook page, but share this content. Ask people to register if they want to. Basically, because you might not see everything on the uploaded video. That everything that we talk about here might not be shown on the uploaded video. Okay. Now, a question, last question. What motivates the bounces that you mentioned? Okay, so this is just math. Okay, this is just math. If you have a 50-day average, the 50-day average is something that is difficult to go down, because then the 50-day average will also go down, right? So if I'm making, if I have a 50-day average of 900, and the next day the 50th day is minus 10,000, that would move the 50-day average really down drastically. But because the 50-day average is quite strong, when a stock comes to the 50-day average, very likely it will go back up. Very likely, because it is just math. And everybody, most of the good traders are watching this data. So when they see that it's bouncing there, they would make a decision on whether they want to sell the share or not. Does that help? Okay, I want you guys to see this. I want you guys to see this. This is exciting. Okay, this is exciting. So we bought Lupin just a little while back, right? Now look at that share. Look at that share. It has gone 900,000 rupees in what? In 10 minutes since I bought it. Just like that. See, I'm actually going to. You know what I'm going to do? I'm going to book this right now if I want to. Okay. I should probably book it, or the 1,200. It's just going. So I already knew that this share is the one. And see, that's why on my trend, on this chart, which I'm looking at, the first share after the Nifty, the Bank Nifty, and the Energy Nifty is Lupin, because that's the share I wanted to target. So I'm just targeting one share today, and it's made a profit. Good job. Well done. I can, finish up in 10 minutes and close it for good. All right. So thank you guys. It's been a pleasure talking to all of you. Thank you.